Hello traders, today is the 18th of May 2010 and a very happy trading to you all. London has opened today at 8 a.m. London time, and so far 4 hours have passed. Okay, so the TSTW24 traders are no more in this market because they spend 2.5 hours from London open to 10:30, applying a rule and a technique of the TSTW24 trading system. So they should be having their break, relaxing nicely for nice profit this morning, and then waiting for New York to open. Okay, and then they will remain again in the market for 2 hours or 2 hours and a half, and so. Okay, they know that the period of the month that are bearish and all these things, and these are the people who are following the professional. They don't want to step on the feet of the professional traders or upset them, okay, or trying to block their way or stand on their way, so to speak. Okay, in order to make money in the stock market, you have to respect the leaders in the market. Okay, even if you are stubborn or I don't know, sorry about this. If you are stubborn or whatever, you want to kick people or whatever, if you come to the stock market, they will discipline you. Okay, because I know some traders, they are very courageous. Okay, they are not afraid of anything. But in the stock market, there's nothing to be afraid of. But sometimes you need to show respect to things. That's very important. Because if you try to enter the market anytime, anyhow, because you believe in something or you trust yourself or you are very confident, okay, you'll be taken out. Those who are making money in the stock market are those who are very flexible. Okay, flexible. They wait patiently. Okay, they don't rush because they know that the market is always giving excellent opportunity. So they wait for their signal, pause. They have a system that are working, tools that are performing. These are the people, they don't jump because you are not going to miss any opportunity at all. Okay? The trade that you're going to lose maybe will be followed by a better trade. Okay? Or maybe you are entering in the wrong time only to lose your money before the trend go exactly where you were expecting it to go. So sit on your hand, be like the master of the market. Okay, say that, just say to yourself, the market will finally come to me. Okay, that's what I say to myself, the market will finally come to me. If that will make you confident, say it like myself, the market will finally come to me. Okay, so you London is open. Okay, you are expecting your signal, nothing showing up. Relax, relax. Maybe you won't trade that day, nothing's wrong with that. So what you can do, maybe you get yourself a BlackBerry. Myself, I have my BlackBerry here, and you play your favorite game. My favorite game is the Brick Breaker. Okay, so you just playing it. Okay, playing it. Okay, maybe there is no trade today. Okay, why not? No trade, that's a trade. Okay, no trade is a trade also. So you just maybe spend time to look at what, to understand maybe the stochastic. Okay, or watch a YouTube video from other traders, or listen or read something, or maybe go to the park with your children or something else, or do something else you like in this life. Okay, so patience is the key. Okay, be very patient. You are not missing any opportunity. Plenty of opportunity will come. Don't look only on one time frame, because there are some traders, they will always come and they will always look at the 5 minute chart. Okay, look on the 5 minute, look on the 50 minute, look on the 30 minute, look on the half an hour, look on the hourly chart, look on the daily chart, look on the 4 hour chart. Nothing is stopping you to look on everything. Because sometimes you come on the 15 minute or the 5 minute, you see one particular pattern, you are so excited, you jump into it, and then later on you look on the hourly chart, you say, oh my god, if I knew that, if I saw this before, I wouldn't have made that trade. You see? But if you take time to look on all the time frame, okay, or maybe you pay attention to the news, because it's very, I cannot overstress this. There are traders who come in, they don't know which news coming in and out today. Okay, I did that myself in the past, and you suddenly you see this huge candle standing in front of you, opposite to your direction, and you know that you've been kicked out of the market big time, and you will be humbled for that. Okay, so pay attention to the news. Okay, this video is about the different type of market that we have, different type of market. Okay, In my previous video, I was talking about the market patterns. It's completely different. So the market patterns, we know that market trend, pause, and trend. In this video, I want to talk about different type of market, okay? Now, the first market I want to talk about is a trending market or an imbalanced market, because you know, you hear, or you may read about it. The trending market is the imbalanced market, which means one particular group is taking over the other group. So the bulls are winning the war. It's an imbalanced market. They take over the bear. So we have uptrend. That's imbalanced market, which is uptrend in this case, because the bulls are taking over the bear. Okay. The second imbalanced market is the downtrend market, which means the bears are taking over the bulls. Okay, so the price going down, the bears are enjoying themselves. Okay, so don't try to mess the party of the bulls when the bulls are winning, and don't try to mess up the party of the bear if the bears are winning. Okay, so imbalanced market, that's one type of market. The second type of the market is a balanced market. Okay, when the market is posing and the Bollinger Band is horizontal and squeeze, okay, and the size of the candle are very tiny and small, or the range of the price itself, okay, the price range, I mean, this is from here to here, is as one range of the price, the swing of the price, okay, or the range or the swing of the price itself is very narrow. We know that we have a balanced market. Okay, a balanced market is a consolidation period. The quiet market, that's a balanced market. In that particular case, the tool that we use are the stochastic and the RSI doing the ping pong, up down. We're selling at the resistance and buy at the support level. The price is bouncing between two levels. I tell you, people make more money in the balanced market than in balanced market, but that's not the subject of this video. Okay, so the second type of market is a balanced market. Okay, so far we have two types of market, and then we have also what we call the oversold market. Okay, or oversold market. Okay, so you see the stochastic oversold or the RSI oversold, and you say to yourself, this market is oversold. Okay, now, and then also there's another type of market that we have, the overbought market. Okay, the market is overbought. Okay, so I think in general we have four type of market, to be honest. If there is more, okay, please make your comment, but I think those are the major type of market. Okay, the balanced market, the imbalanced market, the oversold market, and the overbought market. Okay, now the big question is, when is the market oversold? Okay, and when is the market overbought? Okay, but I prefer to make another video for these two subjects, but I'll quickly say to you, when the market is oversold, okay, it means that one particular group has completely overwhelmed the market. So you go to a market, look at a physical market, and all you see, okay, is the sellers. Okay, there's nobody else. Okay, it comes to a point that nobody else is in the market buying. All you see is people standing there, okay, with their goods, okay, and no buyer standing there, and nobody is there to buy at all. Okay, what sort of market is that? Okay, that market is going to die for sure, I mean, so to speak. Okay, which means those people who are selling now have to take some drastic action, okay, to create some sort of interest to the buyer to come and start buying. Otherwise, they're going to go bankrupt. Okay, so this is what we call the oversold market. So the market is completely full of one particular group that take over, and they suppress completely the other players in the market. Okay, this is a very dangerous thing, because you don't want to suppress the other players. Every player, even if they are wicked brokers or crazy brokers taking your money consistently, they still players in the market. Okay, even if they are nasty hedge fund manager pushing the price widely, they still players in the market, and we need those people in the market. If these are market makers that are controlling the market, we still they are players in the market. If you are loser, also there are some people that lose not stop because they don't want to learn. Okay, they are also players. If you win consistently, you are also players. So if one player is completely taking over the other players, that's when we have the oversold or overbought condition. In the case of the overbought condition, it's full of buyers, completely all one particular group take over the market, and it's completely all buyers. Okay, at that particular point, we have a crash. Okay, that's what's happened when there is a crash. You know that everybody just buying, and nobody's selling, till the point that the market suppressed completely the bear, and nobody's interested to sell, and then everybody now had to take some action to bring the sellers into the market, and if they are not careful, they create a crash. Okay, so this video is about the different type of market that we have. Okay, so till next time, enjoy yourself and be very happy. Thank you.